Cindy is very generous in saying that it's going to be crop insurance magic. I don't know. By the way, my name is Marissa Christie. I work with the Kentucky Center for Agriculture and Rural Development, otherwise known as KCARD. And also with me today is Dakota Moore, who you're definitely familiar with. And crop insurance magic would be taking and making a crop insurance program that could fit farmers that have less than $100,000 of revenue and are doing mostly direct market channels and make insurance available to them. And that's actually what we're going to talk about today. So it is crop insurance magic, crop insurance for small farmers that aren't soybeans, corn, or acres and acres of the same crop in your county. So I'm going to go ahead and introduce you to Dakota. I guess you have any questions real quick before I pull up a slide and get not as much fun?
No, but I just want to remind everyone that registration for the 2022 Kentucky Fruit and Vegetable Conference in Bowling Green is still open. That conference is January 2nd through the 4th. And we will be doing a crop insurance workshop on Sunday, January 2nd. And that one is free. And so when you register for the conference, make sure you select the crop insurance workshop. And
soybean, corn, or other type of farmer, then crop insurance isn't available. And actually, if you call some insurance agents, they'll tell you that, no, I can't insure your diversified small farm that has apples, goats, and tomatoes, which I realize is a very weird thing. But if you had those three things together, whole farm revenue protection would be available to you. So, and real quick, I work for the Kentucky Center for Ag and Rural Development, and we work with farmers on the part of farming that no one enjoys except us, and that is business planning, looking for funding solutions, strategic planning, feasibility studies, all those things, and most of it, with the exception of feasibility studies, we can do for free thanks to federal and state funding. So I already got into this a little bit. What kind of fits small and diversified farmers? The whole farm revenue is really good for farms that have some sort of specialty organic product. You market locally to the consumer, or your farm identity is preserved. It does require a significant amount of record keeping if you're not used to keeping records. If you've been keeping records for NAP or FSA or anything else for 3 to 5 years, you probably have enough records to go for this. The reason that it's so different from a lot of, for example, NAP, the non-insured crop disaster assistance program, and I get those words jumbled together, Dakota probably will laugh at me, but so the difference between NAP and this is NAP is based on what a going market rate for like commodity carrots, for example, would be, whereas the whole farm revenue protection is about your revenue. So if you are selling directly to consumers and you are getting $1.50 a pound or $3 or whatever it is for carrots or tomatoes, and I'm just making up numbers here, that's what would be insured. Your revenue is what gets insured, not your production yield. So anything that impacts your revenue is what becomes insurable, whether that's a production issue, a market loss, a price drop, that becomes what's insured, not just production. So under this, everything in your farm can be under one policy. So what that means is you don't have to have separate insurance for tomatoes, peppers, cattle, and your egg production. Those are not separate things. This can go under one policy. It is available everywhere. In every county in the United States, this is available. And like I just emphasized, it provides protection against a loss in revenue, not in yield. So that's a pretty big difference, because it does protect you a little bit better against market volatility or and your production issues. So it goes with both of those things. One thing new this year that I would love to get out and let everybody know about is the micro farm policy. So used to in the whole farm revenue program, you would have to have tracked your tomatoes, cucumbers, zucchini, cherry tomatoes, all separately. With this, you need to have sales records and production records for your farm as a whole, as long as you have less than $100,000 in sales. And it's really designed for people who are marketing directly to consumers. So that's your CSA sales. Maybe you're doing some grocery sales, you're doing farmers market sales. You can do some wholesale under this, but not a lot. You can actually have micro farm policy on your farm and then also some wholesale. Let's say you do CSA with a certain portion of your produce and you also do some wholesale pumpkins. So you could actually carry both of those under one policy. You still have to have production and sales history, but you don't have to have specific sales records by crops. So that means that if you have been keeping records for the last 5 years of your sales at the farmer's market of your vegetable and beef or fruit or even value-added products such as maple syrup, we think under certain circumstances, even cheese might be eligible. They're still hashing some of that out. Then you wouldn't necessarily have to have it all divided up. This many thousand in cheese, this many in tomatoes, and this many in cucumbers. You could actually just have, I know what my farmer's market sales were last year. So this opens up these policies to a lot more farmers. And your revenue is actually based on how much coverage. Your revenue that they will insure is based on your last 3 to 5 years of sales, and they're actually going to take that off your Schedule F. This is one of those times that if you haven't been keeping good records on your Schedule F as far as your sales, it will impact you. So you can insure, let's say that you averaged in the last 5 years $50,000 in sales. So you can insure up to 85% of that, which would be about $43,000, I think, in sales. Just quick math on the fly, recorded. It's never a good thing, but we did it. The federal government actually subsidizes your premium, and they subsidize it more if you have at least 3 different commodities. And the way this is written is the micro farm policy I'm talking about is actually kind of, they've slid it in there like it's a single commodity, like it's a single crop. So when they say commodity, they mean crop. And it does lower your premium. The reason being, the more commodities you have, you don't want 200, but if you have 3 crops that are your mainstay, that shows them that you're a little less risky than if you only have 1. If you have 15 crops you're trying to be good at, that introduces some risk as well because you're not specializing in anything. But in general, if you have 3 commodities that make up a certain percentage of your sales, you're going to have a lower premium. So what do you need? Dakota mentioned that we will be going over record keeping in more detail. But one thing you're going to need for almost any federal program and crop insurance is actually a federal program that authorized insurance agents are able to provide. You're going to have a farm serial number. You're going to know what you're growing and what type it is, whether you're going to use it fresh or processed, if it's irrigated, non-irrigated, organic, conventional, some production history, the total quantity of all your crops. And there are additional requirements for perennials, such as fruit trees. They want to know the age of they kind of want to know the condition of the tree, the age, the spacing, those sorts of things. So that's what you're going to need to start. How do you get coverage? Find an agent. A risk management agency, RMA, has an agent locator. Then you need to make sure you ask the right questions. There's actually a webinar that we did a few weeks ago about what questions to ask an insurance agent, and have your records ready. One thing I will say is I've had more than one farmer call an insurance agent who says, no, we can't cover that, because in a lot of crop insurance agents are used to covering things that are completely independent of your sales. They're not used to going back through your taxes This isn't a program that they've been doing for years and years. Like I said, we had less than 20 last year in the state. So very few agents are actually comfortable working with this, and they don't want to get it wrong. So, and some of them may genuinely be unaware. So when you call them and they say, no, I don't know how to insure your small diversified farm, you may have called the wrong agent. I will say that there are agents out there that do attend specialty crop and organic conferences. And if you encounter one of those, I would be willing to bet that they are very much more familiar with the whole farm revenue program, because this program is really about specialty diversified or organic crops. So when to start? Deadline for most crops and tax filers is March 15th. The reason I put tax filers in there is some people are not calendar year filers and you can run on a different operation. But for most of us in the small diversified farming world, your deadline will be March 15th. So you need to start, I would say, if not before the holidays, right after the holidays, seeing if you can reach out and find an agent, and even just doing some research on the kinds of things. And Dakota or either one would be happy to talk to you and look at some tools, like they have a premium estimator tool and different things to think about. And actually that's right here. This is a premium example. So this is an old one, and I think this was based on a farm that had like I assumed like $98,000 on average for the last 5 years sales. By the way, if you're a growing farm and you prove you're a growing farm, you can actually insure more than your last 5 years. You can make your approved revenue more than your previous 5 years if they see a steady pattern of growth, or you can demonstrate a new market. But if you look at the top row, that's the amount of coverage, let's say of around, $98,000. So here's if you had 85% coverage, you would have, once your income dropped below $82,960, you would start to be able to make a claim or an indemnity. You see that the premium on 85% is really high. It's 10 grand. The subsidy is only 5,800. So your premium would be 4,000. But I want you to look at the difference. If you wanted to insure 75%, so if you were a 50,000, if you're $100,000 average farmer, and you wanted to insure 75% of your revenue, that's going to cost you about $1,300 a year, which means that once you drop below, in this case, around $73,000, you are eligible for a claim. And as you can see, you can go down to 70, 65, so wherever your risk tolerance. What I tell a lot of people is, when you're looking at this and deciding how much coverage you need, think about how much your household relies on your farm income, and think about also okay, I need this amount for my household, and how much income I need to be able to replant, to do again next year. This isn't just about like, I'm going to lose this money. You've got to think, I want to be able to survive as a household this year, and I want to be able to farm next year. So think what that minimum amount that you need to make is. So when something goes wrong, these things are eligible, like adverse weather, unusual natural causes. If we have a volcano in Kentucky, that would actually be eligible. I find that unlikely, but other things, including weather, are eligible. We've seen a lot of that lately. So, or if you lose a market or the price gets really depressed, so that's eligible. What's not eligible is if you are a neglectful farmer, you fail to follow good farming practices, you just let too many weeds grow, some chemical drift from a neighbor's farm or for something you're using on your farm, animal damage is not eligible. And if the neighbor's teenager takes a four-wheeler and does donuts in your field, also not eligible, which I realize is very unfair. But those are ineligible causes. So what happens is that once you know you're going to have a claim, you need to let your insurance agent usually know in about 3 days. But for whole farm revenue, since it's based on your whole farm's income, just having a loss in one area or another isn't enough. Like if you sell like tomatoes, pumpkins, and zucchini, and you lose a lot of money on tomatoes, but you still don't get below your, like, let's say your coverage level was, you insured $73,000 at that $75,000 at that 75% level. Even, it can be a combined loss of tomatoes, pumpkins, and zucchini. It can't be just, or if tomatoes makes you drop below 73, the important thing is dropping below that 73,000, not which crop takes a loss. And your claim won't be paid out until after the end of the year, because they're going to want to see your revenue numbers from your taxes, because that's what they based it off of. And that's the way that they do this. So you can't really fight. You let your agent know you have a claim early on, if you have a market or a crop failure, and then you won't be able to actually do a claim until the end of the year after you've gotten your taxes together. So just as a plug for the final one of the year, the vegetable, fruit, and nut crops will be on December 28th. That will be pre-recorded because Dakota and I will not be going live between Christmas and New Year's. There's more in 2022. Please go to the Hort Council to register. And I'm going to stop sharing this screen and look for questions, or questions that any of you all have, or Dakota, Cindy, that you all have about whole farm.
While people think of questions, I'm going to drop a survey in the chat if y'all wouldn't mind filling this out if you haven't before. It's the same one we've posted before during our live webinars.
By the way, so beginning farmers actually only need 3 years of history. You don't have to have 5.
Yeah, they're very accommodating, especially for beginning growers. And then there's some other crop insurance policies we've talked about that actually have discounts for those beginning growers.
That's right.
Are there any questions?
If you're interested, I didn't want to run through it live because it has so many kinks, but there's actually an estimator tool that you can put your last like 3 to 5 years of sales in and tell it what crops you want to insure and how much insurance you want. Is there a tool I recommend for record keeping? I recommend whatever tool it is that you will use consistently. I think anything that you can put information in easily and get information out of in a way that makes sense to you. A lot of people, the pile of receipts that you may take to your bookkeeper every year is not an adequate record keeping tool. We find that a lot of organic farmers actually have much better record keeping tools. Square is good for sales. What Square doesn't cover is, and thank you, Mackenzie, it's good for sales because you can use it for free to input your cash transactions. I don't know how Square has decided that that's going to be okay. Actually, I recently saw a study where a farmer's market wanted to look at how price points and times a day and different products and different ways farmers introduce things affected their sales. And they had almost the entire market using Square, and only 2 farmers were using it for credit cards. But they were able to enter all their cash transactions for free, keep inventory, and keep up with how much of each type of thing they've sold. So that's great. What I would say is most people probably need to make sure they keep their production tools. Yes, Square is very easy to use. I am familiar with it from another aspect of my life. And you can also do some nice things like set up a web store with it. But I would say that a lot of people I've taught many people just basic here, keeping a ledger book. There is a binder system where you just print out your binder, sheets, and put them in a binder, and you just fill that out as you go to the farmer's market if you're not a cell phone person, or better yet, your market doesn't have Wi-Fi. I've seen people use QuickBooks. QuickBooks will work, but we find that most of our farmers who are less than $100,000 that might be considering microfarm might not want to purchase QuickBooks. or do the online version. There's some ways that it needs to be set up to do farm business as well. And we are happy to help with that. That's something that KCAR can do free of charge, is help walk you through setting up a record keeping system. So
I will say there's also some IRS guides and handbooks they put out about keeping the Schedule F that you'll need for the revenue reporting. And so if you follow those guides, that can also help you.
Yeah, actually, one of the insurance agents we talked to recommended some publications that had like, here's a good record keeping setup specifically designed to keep records so you can get farm insurance. And it was kind of it was spreadsheets, wasn't it? Okay. I did not drink coffee after my quick lunch, so I mean, it was both spreadsheets and printable things that you could use. So that would be useful.
Yes. I do on our webpage with our crop insurance resources, I've got a record keeping workbook I found. It's more for organic growers, but it would still apply to any other grower.
I will say, so oddly, you do need to make sure you keep all your records, because let's say you don't keep records of how much expenses that you use, like applying soil amendments, any sort of herbicide, pesticides. You still have that in organic farming as well. It's just only approved ones. So if you don't keep, if your expenses drop below a certain threshold of the average they were the last 5 years, and you're like, I need a claim, they're like, so you just didn't have any farm labor or water your crops, and so no, you neglected your farm, because they want to see that you're putting the amount of, and they have leeway. It's not like 100%, it's like 50 or 60, I can't remember now, but you have to, if you fall below a threshold of like what they would expect you to input on the farm, they may deny the claim because it would look like neglect. So you have to keep records of those too, and you should be keeping records of those for your taxes. So
yeah, you may discover you're losing money in a certain area if you start keeping all those records as well. So there's many pros to keeping these extensive records.
And if you're interested in some ways to set that up, we'd be happy to talk with you. Thank you, Savannah, for saying that. The chats pop up, and sometimes I'm fast enough to read them. Do we have any more questions today? You farm across different farms. So do you mean you have different farms, Cindy? Like, if you farm across different counties, different physical locations. So I'm racking my brain, but my memory is that for whole farm, it all has to be in the same county. You may have to take out 2 policies from different counties. Is that what you remember, Dakota?
Yeah, I think most crop insurance policies or programs, it's all county based. So. Yeah, it will be the same application process, pretty much, just so if you had separate policies.
If you had 2 farms in the same county, but they weren't next to each other, I think that's still one farm.
Yes.
My recollection. So.
Someone asked, what if farms are under the same farm number in different counties?
I'm going to say I don't know. I'm just going to freely admit we can look that up, Jillian. If you don't care to reach out, so we have some contact info, or you all may know Jillian, but we'll look that up and get back with you. That's a good one, honestly, in my level of experience. That's a good one that I think for whole farm, I think it may still have to be 2 separate, but we can reach back out and look.
Yeah, like if it was one continuous farm but divided by the county line, I think it may still be 2 policies, because a lot of the counties may have different rules regarding that. Yeah. But we'll do some research for you.
And if you have specific questions like that, if you are curious, I will say that the reason they make authorized insurance providers is because those people are supposed to be very, very knowledgeable. And never feel bad about having them come visit your farm, because they are reimbursed by the federal government for the time they spend with you, helping sell you a policy and getting there their mileage, everything. So never feel bad about it. Their practice is underwritten by the federal government so they can serve you.
And it's worth mentioning that they don't have to be in your county or your state to cover you. They just have to be licensed in your state. So if you've heard of someone across the state that has worked with a grower very similar to your operation, feel free to reach out and see if they might be able to help you as well.
Yeah, like I said, they're paid to drive to see you. And they get paid when you purchase a policy. So.
Well, I don't see any more questions, so I guess we'll just wrap it up. We want to thank everybody for attending and asking great questions, and hopefully you learned something. And I thank Marissa for speaking today and teaching us a little more about whole farm revenue.
Well, I appreciate you all giving me the time and trusting me and putting together slides and talking coherently. So thank you all. I appreciate the Hort Council getting this all together.
Okay, thanks everybody. We'll see you next month, hopefully at the Fruit Vegetable Conference.